Hi, everyone. Today, let's quickly talk about the jobs report, then we'll go over the charts, and then we'll talk about results for the day and positions going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. I did want to talk about this once again. I know we've already talked about it, but the jobs report on Friday was very strong, signaling strong economic growth. And really, this continues to permeate throughout the markets. I don't think we priced it in right away. Markets did tank immediately. We did rally back a little bit, but then I think we really got the result of that today. So you can see everything was down as a result of that report. And that's leading to reports like this. Treasury yields rise as investors assess the likelihood of continued Fed tightening. Now, we already know Fed tightening is going to happen. I expect 50 basis points. That's what everybody's been talking about. And the Fed is not usually one to rug pull unless there's a major reason that they are going to do so. But they've been signaling a slower rise at 50 basis points for a little bit now. I do want to mention that the ISM Services report came out today, and anything above 50 means growth. And you can see here 50.44 signals that the economy is more resilient and could make the Fed more aggressive. We mentioned some concerns over a 75 basis point hike. I don't really think that's likely. And then they mention here 50 basis points is the current expectation. So certainly some concerns, certainly some risk over this ISM report. Strong economic growth, again, not a good thing for the Fed, not a good thing for inflation, which is not a good thing for the markets right now. Moving over to the S&P 500 here on the hourly chart, you can see the jobs report candle right here. Rally, retest of that level, and then we did sell off into the close, and we basically got a straight continuation of that move down from the after hours to today. We did stall out right here at the 144 EMA on the hourly, but as we zoom out here, you can see that this is starting to weaken. We broke down, tested this area again, rallied to resistance. Now we're back in here, retesting again, breaking below this previous high. Now you can certainly expect a lower high at this point. It's not impossible. This move down today was pretty aggressive. So if we get a retest into here, that's a potential shorting opportunity. And then the move down, I expect to be pretty aggressive. Get a continuation tomorrow or the next day. Even if we do get a little bit of a retrace and maybe a stall at that level, you could certainly make that argument. That would be a retest of this high here from Friday, November 25th. Retest resistance here and then get the continuation down. And then the next take profit would be somewhere in the 392.80 range here on the S&Ps. Moving over to the NASDAQ, similar story here. We did get below that low, already retested the 144 EMA here. Does look a little bit stronger, kind of weird. You can see we didn't actually break below that 144 EMA on the hourly chart, but similar story. Expect to come up, retest this resistance somewhere in the 289.50 range. Expect that to hold, and then we get a continuation down to about 283.50. That's my current expectation in my base case, is a nice little rally up and then a move down. I do want to briefly look at the tasty charts of the QQQ here, and you can see we did come right up to that 144 EMA on the tasty charts on the daily. The intervals here are slightly different, so it's worth noting where exactly we are. This still looks slightly bullish. We have all the ATR bands tipping here to the upside. That doesn't mean that this is not going to roll over and come back in and retest some of these lows. But right now, support is right at 272.50, which is one of the levels we've talked about before. On the longer term charts this weekend, 272.50 is certainly possible. Again, I still expect a second day of downward movement tomorrow. But that does not mean that this is going to break down all of the way. At this point, for me, I don't think we're going to make new lows. I certainly think we could retest the lows, but I don't think we're going to really see that capitulation move that people have been talking about. Moving over to the Russell, you can see similar story. Big double top pattern here, well below that next level. I don't think we're even going to get to that previous level here on the Russell. But we did come into contact with support here, which did hold. Certainly potentially push back up into this 185 range, maybe 184.50. Nice little rally tomorrow would be solid. And then I would expect that to reject, maybe even get a little bit of an overshoot at this level here, but I expect this to hold and then a continuation down. Moving over to transportation or ITY on the 4-hour, you can see we had that first test here, rallied up, overshot a little bit here, and then we had the breakdown here today. This looks kind of textbook, gapped through support, continued moving down. This looks very weak. You could maybe argue that we get a slight pullback here, and then I would expect a continuation down. And then we don't really have solid support until maybe 216 here. You could certainly argue a few levels in here, but I would expect that to break down at that point, and then look for these previous highs here at about 213, 214. Moving over to XLK, technology sector surprisingly looking pretty strong. Did not break down as much as the other major indices on that jobs report. XLK holding up. Did break down here today, got below resistance, and we did get below that previous high here, 129.30 as the next level of support. So another 2% or so lower than we are right now. And that would also coincide here with the previous highs at the end of October. Moving over to XLP, consumer staples, you can see it's been on this big rally here. I've been tracking this for a minute. And finally, we broke below that support, and it looks like we're headed lower. We do have one more level of support that I am watching, just about 50 cents lower than we are right now. Once this breaks down, I do expect this to move quite aggressively, moving back to around 72.30 as my next level of support. So big gap here. I think this can move fairly quickly. Maybe a stall here at 74, but really looking at that 72.30 range for the next level of support. Moving over to XLP, this is one of the big drivers here. We've been talking about this for a while. It looked very weak going into the end of last week, and we got the big breakdown here today. So we talked on Sunday about OPEC, talking about them cutting their supply, reducing their output, and that definitely was not good for the oil and gas companies. And then we had this big breakdown, still looking at this to come back and retest these lows. If you go here on the 4-hour chart, there's certainly potential that this comes all the way back down to 116, maybe even a little lower, 111. Of course, there will be some support and resistance. I don't think it's going to go straight there, but this looks very weak. And if you zoom out as well, you can see we've had several topping patterns. This almost looks like a Wyckoff style of distribution. Going sideways for a while, couple of breaks, looks weak, and then it seems like we're getting that big breakdown here now. Moving over to the dollar on DXY, looking at the 4-hour chart here. We talked about it on Sunday. If the dollar found strength, we should expect the markets to move down. And that was contrary to what I expected the markets to do. The dollar has looked weak here recently, but I expected markets to go down at least a little bit today. But it looks like the dollar found a little bit of a bottom here on the 4-hour chart. 3 solid candles on the MACD of bullish momentum. Certainly seems like the 104.50 level is going to hold at least here in the short term, and that we might get a little bit of a breakout here based on the good jobs data and the ISM Services report showing strong economic growth, meaning that the Fed is definitely going to stick to that 50 basis points hike, and they might continue to do so into January and February if the economy continues to stay strong. Moving over to JNK, once again on the 4-hour chart. I did widen out this channel here just to encompass some more of these lows. We still have this break here, which ended up being a huge rejection and rally. This definitely looks weak here now. We've moved down for several days in a row, stopped right at support, and started the next candle right through it. Now we have to expect this is going to move down into that 91 range. We did talk about this moving down a little bit in the last video. Definitely looks weaker here now, and momentum also picking up to the downside here on the 4-hour chart, which should spell more downward momentum for stocks. Certainly possible we get a retest of this resistance and then a continuation down, which would coincide with the major indices and what they look like they're going to do, but of course, still pointing to the downside overall. Moving over to TLT, you can see this rally continues. We did generally look weak throughout the session, but we did make higher lows here on the hourly chart. Let's jump down to the 1 hour so we can see what that looks like. We had this big wick coming all the way down to 105, held that level, came down, almost retested it once again, but then rallied into the end of the session. And this does look a little bit stronger going into tomorrow. Finishing up today here with the VIX. On the daily chart, you can see we have a big green bar, gap up, rallied up here today all the way to 2075. Now the question is this the reversal point? Or is this just one of the short-term rallies that we've seen throughout? So we had a couple days here at the beginning of November, a couple days here in the middle of November, again, a few here at the end of November, and then one more here at the beginning of December. Is this the start? Definitely have to watch this tomorrow. We could still come all the way up here and retest similar to what we did here on 15 November. But if we get a couple days in a row here, we have to be concerned that this is the bottom if you're a bull. But if you're a bear, you're hoping that this is the bottom and this is going to continue up here at least to resistance at that 2050 level. Moving over to my accounts, I did okay. I should have done better. Pretty much right from the start, I expected that we were going to go lower. Here on the QQQ, I did do well. In my individual account, I traded short shares, sold some covered puts, made money on both of those, did pretty well. But on my IRA, I held on to the IWM a little bit too long. I did get assigned some shares here. Like I said, I think we might get a little bit of a rally into the open tomorrow. Hopefully I can offload these shares and get out of that position. And that's really what I'm hoping for. Just a couple of points higher, allow me to get a little bit of money back here on these IWM shares. Then we'll be looking to short the market overall tomorrow, pretty much throughout the end of the week. Let me know down in the comments if you think we're going to make new lows or if we're just going to retest the lows and maybe even make a higher low. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.